What if I told you the next few days could shape the direction of not just the stock market, but also stocks like Tesla? This week, investors are watching a powerful mix of geopolitical developments, major corporate earnings, and critical U.S. economic data that could move markets in either direction. In today's video, we'll break down what matters most, why Wall Street is paying close attention, and what these events could mean for investors in the days ahead. Before we begin, this video is for educational and informational purposes only. Nothing discussed here is financial advice. Always do your own research before making any investment decisions, as markets can change quickly. This week could be one of the most important periods for the stock market, with investors watching geopolitical developments, corporate earnings, and major U.S. economic data all at the same time. Recent reports suggest diplomatic discussions between the United States and Iran have reduced immediate concerns about a possible military conflict, although negotiations remain uncertain and the situation could change quickly. If tensions continue to ease, oil prices may decline as fears of supply disruptions fade, which could improve investor confidence and reduce inflation concerns. Historically, when geopolitical risks decrease, some investors shift money away from defensive growth stocks and into sectors that benefit more from stronger economic activity, including financials, industrials, consumer discretionary companies, travel, healthcare, and software. At the same time, one of the busiest earnings weeks of the quarter is underway, with major companies from technology, artificial intelligence, semiconductors, healthcare, energy, retail, travel, and cloud computing reporting financial results. These earnings will provide valuable insight into consumer spending, business investment, and overall economic conditions. Alongside earnings, markets will also receive several important economic reports, including manufacturing and services activity, job openings, private employment data, weekly unemployment claims, and the highly anticipated Nonfarm Payrolls report. Recent employment data has pointed to slower hiring, and another weak labor report could increase expectations that the Federal Reserve may consider lowering interest rates sooner if inflation continues to moderate. Lower interest rates and declining Treasury yields have historically supported growth-oriented sectors such as technology, software, housing, consumer discretionary companies, and small-cap stocks by reducing borrowing costs and improving future earnings valuations. Tesla has not announced any major company-specific news recently, but broader macroeconomic trends could still influence its stock performance. Lower oil prices, easing geopolitical uncertainty, improving investor sentiment, and lower Treasury yields could create a more supportive environment for the company, particularly as one of the largest businesses in the consumer discretionary sector. Investors will also continue watching Tesla's technical support and resistance levels while paying close attention to this week's earnings results, inflation indicators, labor market data, Federal Reserve expectations, and global developments, since all of these factors together are likely to determine the market's direction in the days ahead. That wraps up today's market update. Over the next few days, earnings reports, economic data, and global developments will likely set the tone for the market, so it's going to be an important week to watch. If you found this breakdown helpful, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss the latest stock market updates. Thanks for watching, and I'll see you in the next video.